Welcome to Finance Decoded, where we turn complex financial concepts into clear, actionable advice. Today, we're unlocking the door to your financial future by exploring one of the most powerful and accessible investment tools available, the S&P 500. If you've ever felt overwhelmed by the stock market, you're not alone. But what if I told you that investing could be simpler than you think? The S&P 500 is often hailed as one of the best starting points for beginners looking to build long-term wealth. But what exactly is it? Let's break it down. The S&P 500 isn't a single stock, it's a collection of 500 of the largest, most stable companies in the United States. Think of it as buying a small slice of the entire U.S. economy. When you invest in the S&P 500, you're not putting all your eggs in one basket. You're diversifying across hundreds of America's top businesses. So why is the S&P 500 such a great investment for beginners? There are three key benefits that make it stand out. First, it offers instant diversification. By spreading your investment across 500 companies, you're significantly reducing your risk compared to picking individual stocks. If one company underperforms, it's balanced out by the others. This built-in safety net is especially valuable for those just starting their investment journey. Second, the S&P 500 has a proven track record of long-term performance. While past performance doesn't guarantee future results, historically, the S&P 500 has shown impressive growth over time. On average, it has returned about 10% annually over the long term, outpacing inflation and many other investment options. This consistent growth potential makes it an attractive choice for building wealth steadily over the years. Third, investing in the S&P 500 can be incredibly cost-effective. You can gain exposure to all 500 companies through low-fee index funds or exchange-traded funds, ETFs. These investment vehicles track the performance of the S&P 500 without the high costs associated with actively managed funds. This means more of your money stays invested and working for you, rather than being eaten up by fees. Now that we understand why the S&P 500 is such a powerful tool for beginners, let's walk through how you can start investing in it. We've broken it down into 3 simple steps that anyone can follow. Step 1. Open a brokerage account. This is your gateway to the stock market. Look for a reputable online broker that offers commission-free trades on ETFs. Many brokers now offer user-friendly platforms designed specifically for beginners, making it easier than ever to get started. Step 2. Choose an S&P 500 ETF. Once your account is set up, you'll need to select a specific S&P 500 ETF to invest in. Some popular options include VOO, Vanguard S&P 500 ETF, IVV, iShares Core S&P 500 ETF, and SPY, SPDR S&P 500 ETF Trust. These all track the S&P 500 index, but may have slight differences in fees or trading volume. Do a quick comparison to find the one that best suits your needs. Step 3. Decide how much to invest and place your first buy order. Determine an amount you're comfortable investing. Remember, you can start small and increase your investment over time. Many brokers now offer fractional shares, meaning you can invest in the S&P 500 with as little as 1. Once you've decided on an amount, place a buy order for your chosen ETF. Congratulations! You're now an investor in 500 of America's top companies. As you embark on your investment journey, there's one common mistake we want to help you avoid: panic selling when the market goes down. It's natural to feel anxious when you see your investment value drop, but remember, the stock market has historically always recovered and reached new highs given enough time. The key to success with the S&P 500 is maintaining a long-term mindset. Market fluctuations are normal and expected. Instead of seeing dips as a reason to sell, try to view them as opportunities to buy more at a lower price. This strategy, known as dollar-cost averaging, can help smooth out the impact of market volatility over time. By consistently investing, regardless of short-term market movements, you're positioning yourself for long-term growth. It's also important to understand that investing in the S&P 500 is not a get-rich-quick scheme. It's a methodical approach to building wealth over years or even decades. The power of compound interest means that the longer you stay invested, the more potential your money has to grow. This is why starting early and staying invested through market ups and downs is so crucial. Another aspect to consider is regularly reviewing and rebalancing your portfolio. While the S&P 500 can be a great foundation, As you become more comfortable with investing, you might want to diversify further. This could include adding international stocks, bonds, or other asset classes to create a well-rounded portfolio that aligns with your financial goals and risk tolerance. Education is an ongoing process in the world of investing. Stay informed about market trends, economic indicators, and how they might affect your investments. However, be cautious of making frequent changes based on short-term news or market predictions. The beauty of investing in the S&P 500 is its simplicity. It doesn't require constant monitoring or frequent trading. As you grow more confident in your investing skills, you might be tempted to try picking individual stocks. While this can be exciting, it's important to approach it cautiously. Individual stock picking requires much more research, carries higher risk, and often underperforms the broader market over the long term. For most investors, especially beginners, keeping the majority of their portfolio in diversified investments like the S&P 500 is a prudent strategy. Remember, investing is just one part of a comprehensive financial plan. Make sure you have an emergency fund in place, manage your debt responsibly, and consider your overall financial goals when deciding how much to invest. The S&P 500 can be a powerful tool for building wealth, but it should fit into your broader financial picture. In conclusion, the S&P 500 offers a powerful and simple way to start your investment journey. It provides instant diversification, has a strong historical track record, and can be accessed through low-cost investment vehicles. By following the simple steps we've outlined and maintaining a long-term perspective, you're setting yourself up for financial success. At Finance Decoded, we're committed to empowering you with the knowledge and tools to make confident financial decisions. Investing in the S&P 500 is just the beginning of your journey towards financial freedom. Remember, building wealth is a marathon, not a sprint. Stay patient, stay informed, and stay invested. We hope this guide has demystified the process of investing in the S&P 500 and given you the confidence to take that first step. If you found this information valuable, please subscribe to Finance Decoded for more guides to help you master your money. We're here to support you every step of the way on your financial journey. Here's to unlocking your financial future and building the wealth you deserve. Thank you for watching, and we'll see you in the next video.